Well, thank you for joining us here on a Monday morning. I'm Marlon Bowling with you as we kick off our first full trading week of June. Thanks for being a part of our day and allowing us to be a part of yours. Well, to kick things off, we did have news from USDA a short time ago that we actually had a sale reported of soybeans overnight. So we get things off to a good start, where apparently we had heard that we sold 120,000 tons of U.S. soybeans once again. And it went to unknown destinations for the current marketing year, so we'll add that to the total. We had another batch that had been sold late last week as well. So let's talk about that. Let's go to Rich Nelson of Allendale Incorporated. He's based in McHenry, Illinois, and well, I guess that's a little bit of positive news, at least for the soybean sector here this morning. It looks like maybe the grain trade could use all the help they can get. It was pretty flat overnight.
I think that's definitely the case here for right now, and a lot of people will be looking for this Monday afternoon crop progress report to show maybe a little better conditions than last Monday's report. A lot of people got some planting done this past week, and also ahead we do have mostly clear skies, get some further work done on the remaining areas. So that might be one area keeping this market down here today, and certainly countering some of the good news regarding these still strong soybean sales.
Okay, I wanted to talk with you about the wheat trade. Now, the wheat was a little bit weaker overnight, a couple of pennies weaker. In fact, if we take a look at our Globex markets here on the wheat futures, we can tell that, well, for example, Kansas City was down a couple of pennies here. We take a look at Chicago. It was fractionally mixed overnight. On the Kansas City market, if we pull that up here, we had July now showing a last trade of about a penny lower at 432 1/4. What is the status here on the wheat? We keep hearing more reports about, well, the harvest is really starting to get ramped up a little bit, but it sounds like protein levels may be an issue this year.
It certainly could. We have definitely see some concerns right now about the U.S. crop as a whole here, the quality like you're mentioning here. And that's good news. On the other hand, we also have maybe some people stepping back, some of our competitors, for example, maybe Russia, now maybe 100 to 105 million ton crop, down from last year's record. So we do have these issues with, like you said, some near-term issues kind of showing up and countering some of the other sides of the coin here. So on the wheat side, we're also saying kind of a balanced issue as far as the near-term fundamentals here.
Well, some of the wheat producers are saying, well, we didn't have a whole lot of an opportunity to really market at decent prices for the crop this year. What do you think about that? Are they going to get a better chance here coming up or not?
And we certainly do. And now, unlike corn, we do suggest that wheat is not going to have a dramatically better new crop balance sheet here. Looks like new crop production will be pretty much equal with last year, different than corn. So on this end, we do expect a mild rally going into summer to get some sales done. In addition, typically wheat, after it finishes with the summer harvest, we actually do have a surprising late summer rally. So on a seasonal basis, plus with the better corn fundamentals, we suggest there will be a mild rebound in wheat into that month of July and August.
All right. I noticed overnight on the crude oil market, we were a little bit weaker once again, and I didn't know if that would have any spillover impact on things like the corn market or our soy oil market today. Do you think?
You know, that's definitely something we can't ignore, and it's something that the trade probably has not been talking about enough. As we're moving away from this $50 crude market and now pushing in the $47 range, we have some renewed concerns about stability in that Middle East region as well here over the weekend. So these type of issues are going to be a problem for us on the corn end, as certainly we have a good share of our product going straight to the biodiesel market.
All right. Well, very good. I appreciate that. We'll bring you back here in a moment. We'll take a look at that livestock industry. That had an interesting close last week, so we'll sort it all out when we come back with Rich Nelson in just a moment. All right, thanks for joining us. We're talking with Rich Nelson, and he is with Allendale Incorporated. He's based in McHenry, Illinois. And let's talk a little livestock market activity here from last week. We do have a livestock summary that we can share with everybody according to USDA as far as what the cash cattle market did last week and maybe the cash hog market as well. And let's go ahead and take a look at the cattle and hog page there. The cattle prices on the cash cattle across the plains were bringing 135 to 137.50. This is according to USDA on the newswire from Friday afternoon, and they basically call it a light cleanup type trade. And on a dress basis, now here we had a fairly wide range. They called the market 213 to 220 per hundredweight, and that would have been anywhere from steady to maybe $4 higher, we'll call it. And once again, that was kind of a light trading volume. So let's stop there. And Rich, wanted to get your thoughts on how we finished last week in the livestock trade on the cattle side, and can we see some follow-through buying again today?
You know, surprisingly, I think we do have to suggest maybe some steady, if not up to a dollar higher trade might be seen this week. And I would still call that itself a victory, especially at this time of year. Simple point is we're not getting the extra numbers in here just yet in previous weeks. Now, this week's cattle kill should be a pretty good size one, 625, 630,000 head. So we're now going to see some numbers come in, but keep in mind the only way we got in these big numbers, which will be processed this week, is by paying up. So you got to assume maybe some strength still going into this trade first couple of days here today.
Now, we also show where the cash hog trade last Friday afternoon, according to USDA. If you look at the live basis prices across the country and average them all together, the market was only 3 cents higher. The range of trade seemed to be 53.25 to 58.50. On a carcass basis, the market was actually down on a national average, 39 cents in value. The weighted average price was 72.98. According to that, it looks like that's kind of taking a little bit of support away from that hog market, and we did close mixed as we wrapped up last week.
That's certainly true, and a lot of people questioning about how much is left of this, which has been a great rally here so far in this trade. Cash hogs, you're now looking at the lean hog index, that measure that the CME group product, futures product expires to. You're looking at that roughly 77, futures trading over this $81 range. So the market's saying we've had a great rally. We expect another $3 to $5 left of it on the cash hog side. But beyond that point, do we have brand new news waiting for us to give us the next push higher? And it's a good question here for us. And right now, we just don't have that next piece of good news here.
There's about a $13 spread between, I believe it's the August and October contracts on the lean hogs, even though the nearbys are all kind of bunched up together within about $1 or so. Is that something seasonally fairly typical for this time of year?
You know, obviously, as you know here, Mark, that is something we do have to point out, which is a normal issue. We do have the largest supply of the year here hitting in the fourth quarter. And this year's spreads, what type of discount is needed, is going to be a very highly controversial discussion, especially as we get some word that we'll have a record hog kill this coming fourth quarter. However, we now are going to have maybe a little more packer buying interest with a couple new faces on the scene here this year. So on this one, we'll have some good questions as terms of how much of a discount is really needed.
All right. Well, Rich, good to visit with you again. I appreciate that very much, and we'll be talking with you guys again soon. Rich Nelson happens to be with Allendale Incorporated. They are based in McHenry, Illinois, and I just wanted to point out, Christina, before we get toward the bottom of the hour and the futures open up, the sheep market nationwide, steady to sharply lower, they say. And we'll have some regional rundowns for everybody as we move on.
All right. Nice haircut, by the way.
Oh, well, thank you.
You're welcome. Markets editor Marlon Boyd.